Rule number 1 is that make sure you don't lose any money. He says never to buy a stock if it's already too overpriced in the market. Always ensure that you have a decent margin of safety so that you can actually protect your invested capital. Margin of safety works on the principle that you've bought a certain share on such a low price that the probability of it increasing in value is now higher than the probability of it falling further. Warren Buffett's second rule is, do not forget rule number 1. He has made a fortune using this system in which he makes a watch list for himself and then waits till the stock prices of these shares go way down. If you buy companies that go on sale, it is highly likely that they will be worth more in a couple of years. Prices in the market will go up and down, but you should be smart enough to hold on to your stocks during these price swings. Ultimately, the long-term direction of most companies is up, and so you won't lose money unless you sell the stocks at a price below what you paid. You are almost certain to make money if you buy great companies at discounted prices and hold them for 10 years. Investing is that simple. If you're invested in a good company, all you've got to do is wait. Charlie Munger said that we do not make money when we buy the company, and we do not make money when we sell the company. We make money when we wait. So, do not get scared if the market is not doing well and your company's stock price has just dropped. This is where people make their losses simply because they cannot seem to wait for the prices to go back up. Then, once I took the first step to become an investor, the rest of it was very simple and followed naturally. If you are just getting started, I would advise you to follow these 3 steps before investing. First, get rid of any high interest-bearing debt if you have debt. And if you owe money, especially on your credit card at very high interest rates, the best thing that you can do for yourself is to get rid of that debt. Paying interest every month can be very crippling, and it's better to stay far away from it. The second thing to do is to open an online brokerage account. Doesn't take a lot of money to open trading accounts these days. In fact, I believe it's completely free, and you just have to keep an initial deposit or minimum investment in it. The third step in the plan is to create a watch list of great companies. Start off with companies whose business model you are familiar with. If you're a tech expert, start off with the technology sector and identify the best investments there. Warren Buffett describes this as finding your circle of competence. They can be companies whose products you use, an industry you work in, or are otherwise familiar with. These should be solid companies with more than 10 years of good performance. Warren Buffett also particularly looks at how competent the management is and how honest they are in their dealings. He says that if you want to judge the performance of any company in the next 10 years, all you have to ensure is that the company is operating in a booming industry and that the management is competent enough to make critical decisions. After you've identified good companies, add them to your watch list and then wait for them to go on a sale during a stock market crash or when the stock is underpriced. That's the time you should buy them. Again, what does this prove to us? Investing is simple. All you have to do is get rid of your fears and excuses and get started. Franklin D. Roosevelt once said, "There is nothing to fear but fear itself." Nothing is stopping you from investing and seizing opportunities today. Overthinking and fear are your worst enemies. They will paralyze you into inaction, so much so that it will cause you a lot of anxiety and depression. Investing is one of the few opportunities that you will have in your life to grow your wealth and achieve financial freedom. All you need to do is to follow a solid strategy. Just start researching about companies and the industries that they're operating in. Know your circle of competence, as Warren Buffett puts it. Research about companies whose business models you know well or have experience with. If you choose a completely different industry, your chances of success can quickly diminish. Make a final watch list of the companies that look solid and financially stable to you. Wait for buying opportunities that you will get to invest in those companies. When those really good companies go on sale, that's when you become the predator and start scooping up their stock from the market. Be very patient when you invest. Yes, you will be faced with times that despite buying the stocks at what seem to be their lowest points, they might fall even more. Price volatilities are a common feature of the stock market. Shrewd investors know better than to worry about such market fluctuations. They will usually have a stack of cash on the sidelines just for this purpose, as they will invest each time the market drops. Keep your eye on the long term. Warren Buffett says that even if the stock market closes for 5 years, he does not need to panic because he is a long-term investor. So, in conclusion, these are the time-tested ways to succeed in the market. They've been effective from the time of Benjamin Graham all the way till now. Thank you so much for watching. If you like this video, give it a thumbs up, share it, and subscribe and enable notifications by clicking on the bell icon so you never miss any of our videos. With that said, I'll see you in the next one.